It's a bit of a down day for the markets and really pulled lower by those resources stocks. It looks like that index closed 1.4% lower, JSE down by close to 1%.
Yeah, carrying on from the theme from last week, a little bit of consolidation in the sector. I don't think anything to be too concerned about. Market down about 300 points on the top 40. As you say, coming down Anglo's, Billiton, bit of Sasol as well.
So nothing to be concerned about. Do you think markets just catching their breath, looking for some more news? We've of course got US earnings season underway in the States, and that's helping to keep the markets going at this stage. Those results be running out pretty soon.
Yeah, I think the market's had a really nice run. I mean, up 25% since September. So a bit of consolidation to be expected. It looks like there might also be a little bit of a switch from EM towards developing markets. Not a wholesale switch, but maybe taking a little bit off after a very good run last year. As I say, overall we remain bullish for the equity market for the year going forward. So we'd be accumulating on weakness.
Well, you said perhaps a switch from emerging markets back to developed markets. We have seen our rand coming under a bit of pressure since last week, trading still above the 7 rand level today. Do you think that ties in with that thought that we could be seeing some outflows at this point?
Yeah. Just to remind us that we have quite a volatile currency. Obviously, it's been a while since we've had the rand on the bearish side of things. It seems to have run a little bit ahead of itself, so we saw some consolidation. We saw the dollar rand heading back towards that sort of 7 handle today. One would only really get quite concerned if it broke convincingly through the 200-day. That's around 722. So we'll keep an eye on it around these levels, but look for it to consolidate from here would be our call.
We've got the JSE's All-Share Index back below that 32,000 level, if that's a critical level to look at. What are we looking at from here? Are we going to see a bigger correction in this market? Would that be healthy for the market?
Yeah, I wouldn't mind seeing a little bit more correction. I think a lot of people missed out on the run. We had a very, very strong December. So I think a lot of cash sitting on the sidelines, and I think that would come in on a correction. We're sort of flirting with the 40-day moving average at the moment. If that fails to hold, the market could give up another 1,000 points, and that would still be considered a healthy correction. Nothing to really upset the apple cart and be seen as equity markets suddenly turning very bearish. When you've had a run to the size that we've had, it is natural for markets to consolidate.
Brett, on a whole, how have the markets been viewing the US corporate earnings? We've seen some pretty good numbers coming out, particularly from the tech companies. Few of the financial shares disappointing the market, though. What's the overall impression?
On the whole, I think 42 out of 57 companies that reported surprised on the upside. So the markets were expecting a good set of numbers to come out in there, and I think that's also why you might see the US markets also pausing sort of late into January, maybe into early February to take a little bit of profits. But on the whole, the earnings coming out very good. In fact, the picture for the US market looking very positive compared to where it was last year. Earnings expected to continue growing this year, and also GDP expected to pick up.
Brett, couple of our retailers and banks looking a little bit softer today. Do you think this is still a reaction to the interest rate decision last Thursday?
Yeah, I think the retailers, I mean, once again, that was the hot sector last year. One can expect, those are the interest rate sensitive stocks. We're coming to the end of the cutting cycle. The next move will probably be up in interest rates towards the end of the year or into the new year. So you've seen, across the property loan stocks, across some of the retailers, across the likes of Imperial that are very sensitive to interest rates, you have seen some profit taking.
Envela Panda today, 23% lower, 38 rand 50 at one stage the last time I looked at it. This is a company that is going through an unbundling though.
Yes, so don't read too much into that. It's not that Envela Panda is suddenly in trouble. What they did was they unbundled their shareholding in Goldfields to the shareholder. So what you lost on the Envela Panda shares, you would have made back on your holding in Goldfields. So if you had a look, I think Envela Panda shares were down about 11 odd rand from their 50 rand close. And then for what you would have got out of the Goldfields, you would have made back that 11 rand. So square for investors in Envela Panda.
And going forward from here, and buy on the dips, is that what you're telling investors?
Yeah, certainly. I think that if we do see some consolidation, we see the markets on the top 40 index, back under the 28,000 levels, so that's about 500 points lower than here. I would see that as a nice entry level into the market for the year going forward.